Today was a 550 point graveyard for option buyers, but it didn't have to be. If you watched my last video on the 1 to 3 RR no guesswork strategy, you would have stayed completely safe today. Why? Because that setup didn't trigger even once in this chaos. Today, I am going to prove to you why a strict rulebook is the only thing that stands between you and a blown account. Let's look at the charts. This is Nifty 5-minute time frame chart, and as you see, today Nifty was completely zigzag for whole day, right? As we discussed yesterday, I will just shift to daily time frame. There was a gap earlier, right here. If you see, this gap was there, right? And we were discussing on last Friday that will Nifty cross 23,000, and today it has crossed that 23,000 and tried to fill this gap, and now it has again retraced back. Now I will just explain you 20 EMA structure. As you see here, our last high as per 20 EMA structure is 23,748.05 per, right? Now if you see today what happened, today again Nifty start falling, but after some time it has started retracing, right? It has just retraced back and tried to give some momentum on upside, and during this time what Nifty has done, that 20 EMA structure has formed a new 20 EMA low. So now we have 20 EMA high, that is a 23,748.05, and 20 EMA low, that is 23,092.7. Now in this range we will Nifty will be still in the bearish trend, right? So remember, if this particular level will be broken, suppose tomorrow or day after, then our next high will be this one. If tomorrow, just for example I am telling, that way something happen, right? Suppose from here Nifty start falling and 20 EMA structure again close below this particular line or go below this line and again retraces back inside, then our next high will be this one and our next low will be this one. That way we should identify the structure or the trend. Okay, and suppose tomorrow only, if this particular 20 EMA structure go like this, for example it goes here, again from this point it moves up, and if it crosses above this particular line, that is our 20 EMA structure high, then we can consider that now trend has changed to bullish one, and then our next low will be in that case this, right? So remember, that way we should always consider the structure. Now let's move to the option charts. This is 22,950 call chart. As we know, our primary filter, what it says, 20 mm must be above 50 mm to take a buy side trade. But here if you see, 20 mm structure, EMA was below 50 mm, so there was no trade opportunity. After that it has start forming, 20 mm start trending up above 50 mm, but there was no opportunity as per our 3 candle theory or inside candle setup. Now I will just show how our last video, that is 1 to 3 no guesswork strategy, would have saved today in case of option buying. See here, this is the 20 EMA channel, right? What happened? See, here if you see market, these candles start moving up, right? And this particular, at this particular point, this red candle has formed, which is our signal candle. But if you see, this signal candle is formed far away from the 20 EMA channel. So we should not take a trade here, even if RSI value is above 60. See here, the RSI value is around 75, but we should not take a trade here, because this particular red candle which is formed is far away from 20 EMA channel. And even if you have considered this particular red candle as a signal candle, still our next rule is not valid. What is that rule? Our stop loss should be below 40 points. If you see here, your stop loss would have been above 40 points, right? So your rule would not be valid here. So there was no any call option buying trade today as per our 1:3 RR no guesswork strategy and our plain 3 candle theory inside candle theory strategy as well. Now let's move to the put option buying chart. See here what happened. I will just explain you 20 EMA channel and RSI 1:3 RR strategy. See here, a perfect red candle formed near 20 EMA, right? But when this red candle is formed, RSI value is below 60. See here, 57.3, and then it's 57.47. So can we take a trade here? No, because as per our rule, the RSI value should be above 60, so there is no trade. And after that, put options start trending below 20 EMA channel, so there was no trade as per our no guesswork 1:3 RR strategy. Now let's move to the our normal 3 candle theory and inside candle strategy, which we generally discuss. See here, what happened? There was not even a single trade, right? See here, 20 EMA start trending up, 50 EMA is also down, and both are trending upside, but there was no any setup form. So there was no trade in case of put option buying also. And after that point, 20 EMA start trending below 50 EMA, so there is no setup. So overall, if you see, there was no call option buying trade in case there was no option buying trade in case of call or even in put. So if you followed setup, then you must have saved capital today. Now let's shift to my actual stock trades. I will just shift time frame to 15-minute. See here, a perfect inside candle setup was formed here. 20 EMA, 50 EMA trending down, and if you see, red candle has the highest volume, which is our mother candle. So at low we will take a trade, high will be our stop loss. But in this trade, my stop loss got hit because market retraced after 2 p.m. today. My next trade was in CDSL. See here, inside candle setup was formed. 20 EMA, 50 EMA trending down. Red candle has the highest volume, so I took a trade at low of this particular candle. High was my stop loss. Again my stop loss hit in this particular trade. Here in this stock, 20 EMA, 50 EMA trending down. A 3 candle theory setup was formed here. First candle, second candle, third candle. Red candle has the highest volume, so this is a valid setup. Took a trade at low of this candle. High was my stop loss, and I closed this trade in a good profit at the end of the day. So overall, this trade helped me to close the day in a small loss. Today it was a capital preservation day. The 550 point move was driven by pure volatility, not a sustainable trend. For option buyers, the theta and the zigzag were a double-edged sword. In my stock trades, the market's noise triggered a technical exit. Remember, a small control loss is a victory in a chaotic market. It means your system is working to protect you from a total disaster. What should be our key takeaway for tomorrow? The market doesn't owe you a trade every day. Most traders fail because they try to force a setup in a 550-point storm. Your goal for tomorrow isn't to recover today's loss, it's to reset. If your setup is not clean and the risk rule isn't met, stay on the sidelines. In trading, patience pays more than any indicator. If today's market taught you a lesson, let it be about discipline over emotions. I share these rule based setups every day to help you become a professional trader, not a gambler. Trading isn't about guessing, it's about waiting for your age. My 1s to 3 RR strategy is designed to keep you out of traps like today's 550-point zigzag. If you haven't seen that strategy yet, I will link it at the end of this video. Watch it right now to understand why there was zero option trades today. Subscribe to Wealth Vault Academy to master these rules. Comment 1s to 3 if you stayed disciplined today. See you in the next one. Thank you.